Morning, guys. You can see today is Saturday. Time is around 11. Let's look into this weekly trade analysis in Bank Nifty, guys. And you can see the big zone over here is the weekly pivot zone, guys. And this is on Monday's pivot levels. And you can see the market gapped up, guys, and a huge gap up in market from 23,672 to 24,000, guys. 8,000 points in gap up, guys, which clearly changed the market sentiment here from being bearish to bullish, guys. And let me take this weekly pivot out. Since the market gapped up, and you can see the whole week the market is trading at the weekly pivot levels. And here it was on Monday. Here the market was trading below the weekly pivot levels on last week, and in this week the market trading above the weekly pivots above, clearly signifying the market sentiment is bullish. And you can see this is the daily pivot level where the market gapped hugely, breaking the 200 moving average, the 9 as well as the 21 moving average over here, and clearly signifying bullishness, guys. And you can see how huge the market gapped up. And if you consider the low to high of this candle, and if you mark the 5 minute zone over here, this is the 5 minute zone, guys. And let's look into a 1 minute time frame and see how the market here looks over here. And if you look into a 1 minute time frame, and if you try to plot the mid of the first candle, this is the mid of the first candle, and you can see clearly the market here gapped up and trading above the mid of the first candle as well as the 5 minute zone. And if you try to plot the anchor VWAP level here, this is the anchor daily VWAP level, guys. And what we need to see is that in case if the price is taking support from the daily VWAP level, you can see here the market here took support from the daily VWAP level and showed some kind of bullish momentum. And here the market is showing a clear sentiment in bullish momentum. And if you look detailing, guys, what happened here is that the market gapped up and showed a huge momentum, clearly changing the market sentiment from being bearish to bullish. And market is trading above the 200 moving average, above the 9 as well as the 21 moving average in both 1 minute time frame. And if you look into a 5 minute time frame, also the market is trading above. And if you look into a 15 minute time frame, also the market is trading above, guys. When the market is trading both in 15 minute, 5 minute as well as 1 minute time frame above the 200 moving average, then definitely there is a very less probability the market would break these levels, guys. And instead, we should look for clear bearish setups like this. Okay, here where the market clearly broke the 9 as well as the 21 moving average with this bearish momentum over here and close below these levels, clearly signifying bearishness. And you can see here the market also break these levels. Only at this point is where you can consider the market. But whenever the opening, guys, whenever the market is trading above the 200 moving average, the 9 as well as the 21 moving average, clearly signifying bullishness. And you should always look for long setups at that time, guys. And after this kind of huge gap up, guys, in case if you might have bought anywhere along this day, even after seeing this momentum, or you can see the market consolidating and clearly broke structure towards the upside, you can see with a clear break of structure here, guys. You can see a clear break of structure. And if you consider this momentum towards the upside, and if you try to mark the low of this candle to the high of this candle, you can see the market coming all the way to the optimum trade entry zone over here. So either you could have, this is the optimum trade entry zone where you could have entered your long position, or in case what you could have done is that you might have expected the market after this kind of huge breakdown, the market might reverse here and continue further selling like this. This is one possible case scenario where you could have expected, or you can see there is an order block level also here where the market came and mitigated this 1 minute order block. And there might be a lot of pressure that after seeing this liquidity sweep over here, you can see the market swept this high over here and showed a bearish engulfing pattern over here and closed below these levels, clearly signifying bearishness, guys. And if you consider this momentum, you can see definitely this is a bearish momentum, engulfing pattern, as well as a bearish momentum over here. And what you could have done is that you could have waited for this retracement levels, guys. And what you could have considered is to plot the high to low of this candle over here. And once if this 0.5 levels has been broken towards the upside, is where you could have entered long position. You can see the 0.5 levels, guys, where it has been broken towards the upside is where you could have entered long position, keeping your stop loss just below this candle itself. So after this kind of breakout, guys, this is where you could have entered, keeping your stop loss just below this candle itself and targeting it all the way towards the upside. And for target levels, what you could have done is to plot the fib extension levels of this momentum. And if you try to plot the fib extension levels, the high of this candle to this high, to all the way to this low of this candle, you can see you could have targeted the 100% move, or you can see the market reaching all the way to 1.68 level, or you can see if you consider the mid of this candle exactly is where the market here rejected and formed another bearish candle over here. So this was one short scalp where you could have taken this, targeting it all the way to 1.68 level over here. And you can see after this kind of bullish momentum, guys, what happened is that the market here broke this candle over here, the zero point 0.5 levels with a fair value gap over here. And you can see the market came all the way here and swept this liquidity. This is a clear sell side liquidity sweep over here. And after sweeping this liquidity, you can see the market formed another break of structure over here, clearly signifying bullishness. And what you can see is that if you consider this momentum over here, the high to low of this candle, again the market came all the way here, swept this liquidity below, and again you can see the market here sweeping this liquidity over here. This is a clear sell side liquidity where the market sell side liquidity over here. So you can see this is the sell side liquidity where the market came over here and swept the sell side liquidity on, or you can consider this optimum trade entry zone, guys. This is the clear optimum trade entry zone where the market over here came and there was a fair value gap over here. Along with sell side liquidity, there was a clear fair value gap over here. I hope you're understanding this. Let's not take this liquidity zone over here. But what you can see here is that instead, guys, when you see this kind of momentum, it's better to mark and you wait for some sort of reaction, guys. There is optimum trade entry zone. There is a fair value gap over here. And what you need to see is that a certain reaction happening here. And what you can consider is that if you consider the fib extinction levels, the common point between this to the common point between this, if you consider the fib extinction levels, the common point between this to the common point between this and to the common point between this. So you could have targeted the 1.68 level over here. Or what you can consider is that you can see this is the first order block level, guys. And again, the market broke structure towards the upside. And you can consider this to be another order block level over here. And if you consider this swing momentum, guys, if you consider this to all the way to this high over here, you see the market retrace, so we can't consider this swing momentum over here. So you can consider this whole momentum as a single momentum. And if you consider this momentum over here, again you can see here the market coming and taking support from this optimum trade entry zone over here. The optimum trade entry is the 0.70 and 0.86 level, guys. And if there is fair value gap over here between the 0.16 to 0.70, even this zone is also considered to be an optimum entry zone, guys. And you can see how market came all the way here, sell side liquidity sweep over here and rejected price from these levels and continued further bullish. I hope you're understanding, guys, what I'm saying. And the market took support from these levels and continued. And with this momentum, guys, even there is a fair value gap over here. You can see there is some more fair value gap over here where the market has not yet been mitigated. But here you can see the market swept the sell side liquidity over here and rejected and closed between these range, guys. This candle over here, guys, showed a very good confluence that you could have taken long position over here as well, keeping your stop loss just below that candle itself, below this candle itself, where you could have entered and keeping your stop loss just below this candle itself and targeting it towards the upside. This was another trade setup where you could have taken. And in case if you try to plot the fib extension levels of this swing momentum, the common point between this to the common point between this to the common point between this, so you can see the 100% move here. And in case if you try to plot this fib extension levels over here, the common point between this to the common point between this to all the way to this common point, you can see the 100% and the 1.68 level here lying close to each other. So here is this is the zone where you could have easily exited your position, guys. The 100% move is where you could have easily exited, or the 1.68 level if you consider this wave extension level. And you can see here the market is trading above the 21 moving average, clearly signifying the market sentiment to be bullish. You can see market trading above the 21 moving average. And once if the market broke here, guys, the 21 moving average is where you could have either exited your long position. So this was another trade opportunity for you to take long position over here and keeping your stop loss just below this candle itself and targeting it all the way to this 100% move over here. So this was another trade opportunity. And you can see this kind of bearish momentum towards the downside, which is not strong, guys. In case if there is a aggressive selling towards the downside, is where you could have expected the market to continue further bearish. But you can see there is no fair value gaps, there is no imbalance. But you can see there is an imbalance over here with this kind of bullish momentum where the market broke structure towards the upside. And you can see there is a fair value gap over here. The market came, formed an equal low liquidity over here. You can see there is a equal low liquidity. Market came, mitigated this fair value gap, rejected and closed within this range, guys. Whenever you can see this kind of sweep, guys, where the market comes to this zone and sweeps liquidity over here, you can see price rejection, or you can call liquidity sweep over here. And you can see another liquidity sweep over here, liquidity sweep over here. Whenever you find this kind of rejection, guys, it's better to enter long position. And you can see rejection and price closing in this range, guys, the previous candle range. That's very significant, guys, for market sentiment to be bullish. When the market rejects and doesn't close below the previous candle's low, and it closes below the previous candle's low, guys, that signifies bearish only. But whenever the market rejects from an important zone over here, since there is a fair value gap over here, there is optimum trade entry zone, there is order block level here as well. The market retraced here, swept the equal lows liquidity over here. You can see this low liquidity over here, and closed within this range, clearly signifying bullishness. Or in case if you try to plot the high to low of this candle over here, or you can consider the common point between here to the common point written here, and you can see this candle over here broke the 0.5 as well as the 0.6 level. And for better risk to reward ratio, you could have entered here, picking the stop purchase below this candle itself and targeting it all the way towards the upside. That's another entry, possible entry, where you could have added on to your trades here and continued further bullish, guys. This was one entry, and you could have either entered here also, guys. um, you could have even entered your positions here as well. So this is another entry where you could have entered for long position over here after this break 0.5 levels over here, and keeping your stop loss just below this candle, guys. And if you consider this common point between this to the common point between this, the low of this candle to the high of this candle, and targeting it all the way to the 100%. So this is one possible entry where you could have taken. So this is how you could have taken this. So, and you can see after this kind of huge extension market towards the upside, there was a lot of buying pressure, guys. And what you can see here is that even though the market here was trading above the 9 as well as the 20 moving average and showing good signs of bullish momentum, but what you need to remember here is that the momentum here is not strong, guys. When you see here, the upward momentum is not strong. There is no fair value gaps. There is no imbalance also. And the market is moving in a very balanced way towards the upside. Even though the market sentiment here is showing a very good sign of bullish momentum, you can see there is no proper bullish momentum, guys, when as compared to this kind of momentum towards the upside. And what you can see is that the market here swept this liquidity and formed a huge bearish candle over here. After seeing this kind of bearish candle, guys, after the market is being overextended towards the upside, or at that times, guys, what you need to plot is the RSI over here. And what you can see here is that with this candle, guys, over here, the huge bearish candle, the market over here was, you can see, even though the market showing some kind of bullish momentum, the RSI was completely showing bearish momentum. Okay, so here you can see the decrease in RSI momentum, and here it shows some kind of momentum towards the upside. But here you can see after this candle over here, guys, the market clearly dropped in momentum with this kind of reversal. You can see here, so clearly signifying the momentum has been reduced, right? And with this kind of huge downward momentum where the market broke structure towards the downside, and you can see clearly the market even broke this structure towards the downside, or you can consider this to be a change in state of delivery. The series of last up candles before it broke structure towards the upside is this change in state of delivery. This is the series of last up candles, guys, before it broke structure towards the downside. So what you can see is that after this kind of bearish momentum, the market again retraced, and you can see this kind of channel pattern formation, clearly signifying there is no strong bullish momentum over here, and another channel pattern formation over here, which shows another the momentum is not strong, guys. And you can see this kind of momentum as well as this momentum clearly showing the market sentiment is not strong. And if you try to plot the anchor gap levels above this swing high over here, you can see rejection of price from this anchor gap level, and you can see in the market breaking anywhere along these lines also, you could have taken short position over here, keeping your stop loss just above this candle itself and targeting it all the way towards the downside. And what you could have targeted is that the last demand zone over here. Here there is an order block level over here where the market broke structure, or you can consider you could have clearly targeted this fair value gap over here, guys. Or or you can see the market sweeping this liquidity below these levels, as the market here came and mitigated this order block level. As you can see, there is a clear 1 minute order block level over here where the market came and mitigated this order block. And after mitigating, the market showed a huge bullish momentum. So you could have targeted it all the way to this order block level. I hope you're understanding it is why you can see, because you can see there is a fair value gap here also. So you could have expected the market to even mitigate this fair value gaps over here. But before this fair value gaps, you can see there is an order block level here. So you could have considered this VWAP level as well. This is the day VWAP level. So either you could have expected the price to take support from this day VWAP level and continue further bullish. Along with that, guys, this order block level also forms a certain sort of demand zone over here, clearly signifying some sort of support over here. And you can see after this, guys, the market huge showed a very good bullish momentum and clearly showed a market structure shift, breaking the previous lows, guys. You can see this low, this low, this low, this high, this high, this high, sorry, guys. And clearly signifying bullishness and came all the way to this order block level and even mitigated this order block level as well. But here, after this kind of momentum, guys, huge momentum, after market retraced and it failed to make a higher high, instead it market broke structure towards the downside, clearly signifying bearish momentum. And you can see clearly the market here formed a chalk over here, came all the way to this order block levels and rejected price from these levels. You can consider this to be a 5 minute or 1 minute order block level as well, or you can consider a supply zone over here, and rejected and came towards the downside. And if you try to plot the high to low of this candle, you can see the market rejecting from 550 levels over here. This is the 350 levels where the market came, rejected price and continuing further. So in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, what you can see here is that you could have targeted the 100% move. But here the market didn't reach all the way to this 100% guys. So what you should never trade this kind of momentum towards the downside after this kind of huge bullish momentum, guys. Even though the market is showing some sort of bearishness, guys, definitely I won't recommend you, even after showing rejection of price towards the upside, to trade towards the downside, guys. What we need to see is always look for long setups only. So if you try to plot the common point between this to the common point between this, and again you can see the market coming all the way to this optimum trade entry zone over here. This is the optimum trade entry zone where the market came, mitigated these levels over here. This is a clear optimum trade entry zone where the market came, mitigated the levels over here. And you can see clearly the market showed some kind of bullish momentum here, a clear break of structure, or you can consider it to be a chalk formation. And if you try to plot the last down candle before it broke structure towards the upside, it's a clear 1 minute order block where the market came, mitigated again, it showed some kind of change in state of delivery, or you can see another chalk formation over here. And after this kind of momentum is where you could have targeted is failure swings, or you can see there is a fair value gap over here. And this is exactly where you could have targeted, guys. You can see there is no, there is all failure swings over here, guys. So after this kind of momentum, or even after this kind of momentum, what you could have expected is that the market coming and retracing to 50 levels and continuing. But what happened is that the market again formed an equal liquidity over here, and there was a fair value gap over here. You can see there was a fair value gap over here. So the market came, mitigated this fair value gap and showed some kind of bullish momentum. Either you could have taken long position over here is after the market mitigating this fair value gap and showing some sign of bullishness. You can see this fair value gap over here where the market came and mitigated this order block level as well and showed some kind of bullish momentum. And with this candle over here, or this candle rejection from this previous swing lows, guys, what you can see here is that you can see there was a 3 consecutive lows over here where the market showed some kind of bearish momentum, and this is a clear sell side liquidity over here. You can see there were multiple lows, and with this candle, guys, the market swept and closed within this range, clearly signifying some sort of bullishness. And with this candle, you could have easily taken long position, keeping your stop loss just below this candle or so. And for target levels, what you could have done is to plot the fib extension level size. And for fib extension levels, if you try to plot the common point between this to the common point between this to the common point between this, so you could have targeted the 1.68 level or this fair value gap is. This is exactly where you could have targeted the 1.6 or this fair value gap over here. So this was one possible entry. Or what you could have another done is to plot these retracement levels towards the downside, since the market here is showing some kind of bearish momentum. And once if this 0.5 levels has been broken towards the upside, you can see this the 0.5 levels over here being broken towards the upside, and the market is consolidating above these levels, guys, clearly signifying some sort of bullishness. Either you could have plotted the anchor gap level here. So if you try to plot your anchor gap level of this swing low over here, this is the anchor gap level, and you can see the price taking support over here. There are multiple supports over here, guys, where price is showing some sort of support over here. And you can see the market consolidating in a sideways, taking support and showing very good bullish momentum, guys. So either you could have taken your long position over here, keeping your stop loss just below this candle and targeting it all the way towards the upside. So this was another possible entry where the market here, as you can see, the anchor gap level is showing a good support at this zones, guys. So that's another possible entry where you could have taken another long position over here and targeting it towards the upside. And you can see after this kind of huge upward momentum, the market here rejected price from these levels. And what you can see here is that the market, guys, here showed a very good bullish momentum, again retraced and failed to make a higher high. Instead, the market broke structure towards the downside, clearly changing the market sentiment from being bullish to bearish. But what we need to see here is that if you consider this equal low liquidity over here, the market taking support over here, this is a clear sell side liquidity, guys. And you can see the market below this sell side liquidity is a fair value gap over here. So the market came mitigated this fair value gap over here. So I hope you're understanding this. So it's better to mark all these zones over here as the fair value gap, the sell side liquidity before the market formation only. And what you need to see here is that in case if certain reaction is happening here, guys, in case if you find certain sort of market reacting to certain zones, guys, only then you can take low position. And you can see as soon as the market swept these lows over here, you can see this is a clear equal lows. The market swept these lows and the market tapped into this fair value gap and showed a huge bullish momentum. And you can see after that, the market failed to make a lower low. Instead, the market broke structure towards the upside. So either you could have entered long position somewhere here, guys, after keeping showing this kind of bullish momentum, keeping your stop loss just below these levels and targeting it all the way to the swing high over here. You can see the market came all the way and even mitigated this swing high over here. And after this, the market again retraced to these levels over here, guys, the zero point 0.5 levels, or if you consider this bullish momentum towards the upside. So what you can consider is this is the last down candle, guys, before it broke structure towards the upside. So low to high of this candle, market mitigating this fair value 550 levels over here. You can see this is a clear 550 levels over here, where the market came, mitigated this 550 levels and showed a bullish momentum towards the upside. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this, what you can see is that you could have targeted a 1.68 level. You can see the next day the market came all the way to this levels over here, guys. The 1.68 level rejected price on these levels and continued further bearish. So what you could have just hold it on to your traders, or in case if you try to plot the anchor gap levels of this swing over here, and what you can see is to plot. Let's look at this support over here, and you can see after this candle breaking immediately followed by another bullish candle over here, clearly showing some sort of demand, and that is where you could have entered long position and keeping your stop loss just below this candle and targeting it all the way towards the upside. So you could have continued further bullish, guys. So this is another. This is the trade setups, guys, where you could have taken it normally. See that you could have either entered here, you could have entered here also, but I didn't ask you to enter here, guys. I asked just after 9:52, guys. After this kind of every confirmation happening, only then I showed you the first trade. There were possibility that when the market opens above this 5 minute zone, market trading above the 5 minutes range, everything else you could have taken long position over here, keeping your stop loss just below this candle itself. This was one good opportunity, guys. Whenever you find such kind of trend as this, you could have just hold it on to your trade and you could see you could have traded it all the way towards the upside. This is one possible scenario, but here is what I'm explaining the price action over here, guys, and how you could have easily taken trades on that day. And you can see on that day there was a narrow pivot range, clearly signifying the market sentiment is going to be a trend day. And after a trend day, guys, you can see the pivot range is a wide pivot range. And on this days, guys, there is a high chance the market sentiment would go sideways, guys. So you can see the market, whenever you find this kind of a wide pivot range, it clearly signifies that the market on that day it's gonna be a sideways day. And if you consider the low to high of this candle over here, and if you try to plot the 0.5 levels over here, and along with 5 minute zone over here, guys. So what you can see here, if you consider the low of this candle to high of this candle, and if you try to plot the 5 minute zone over here, this is the 5 minute zone. And let's look into a 1 minute time frame analysis and see. What you can see here is that let's keep Monday's VWAP as it is, guys, since Monday's VWAP is very significant for you to make trading decisions. So Monday's VWAP though is very important. And what you can see here is that the market showed some kind of bullish momentum. Market gapped down, but showed a very bullish candle over here, rejecting price from this 200 moving average and continuing further bullish, guys. But what we need to see here is that in case if the market sentiment today is bullish, guys, after the market rejecting price from this 200 moving average and closing above the 9 as well as the 21 moving average in a 1 minute time frame, you can see the market would have showed another bullish momentum, consolidated in a sideways manner and continued further bullish. This is usually what market usually behaves in case the market sentiment would have been bullish, guys. But instead, what happened is that even though the market rejected, gap down, and showed a very good rejection of price from these lower levels, and rejecting price from this 200 moving average and closing above the 9 as well as 21 moving average. Even after this kind of huge bullish candle raise, you can see what happened here is that the market here swept this liquidity. This is the previous day high, guys, and this is a buy side liquidity, guys, because there would be a lot of buy stops and buy orders as well. Buy stops are those people who want to sell, guys. There would be a lot of liquidity here, so people who want to sell, you can see they might have placed their buy stops over here, buy orders over here, buy stops over here, and you can see they might be selling here, and you can see after rejecting of price on these levels, and you can see this kind of huge downward momentum and even buy orders, guys. And you can see the market swept this liquidity above this and closed within this range over here. And after this, the market here is breaking both the 9 as well as the 20 moving average towards the downside, clearly signifying bearishness and even breaking the first candles over here. Or you can consider even breaking this candle over here, as you can see the previous support over here. Or you can see the market coming all the way to this 1 minute odd block levels over here, which has not yet been mitigated, guys. Okay, you can see the market has mitigated this order block, but you can see the market taking support from these levels and coming all the way to these levels. But here there is another fair value gap, which you should always keep in mind, guys. You can see the market here rejecting price from this fair value gap as well. So what you can see, there is a demand over here as well as there is another fair value gap over here as well. And you can see how the market respected this demand zone as well as this fair value gap over here. And you can see the huge selling pressure, guys. After this kind of rejection, you could have definitely taken long short position, guys, but this is only for experienced traders, guys. When they see this candle over here breaking the 9 as well as the 20 and moving average towards the downside, is where you could have taken short position, keeping your stop loss just above that candle and targeting it all the way towards the downside. And for target levels, what you could have done is to plot this retracement levels, and you could have marked the 1.68 level. Or what you could have done is to plot the fair value gaps over here, and you could have targeted it at that levels, guys. This is one possible scenario, but definitely I would not consider that momentum, guys, because that's a very aggressive entry without proper confirmation. But risk to reward ratio is perfect, guys. You can see there is only one candle risk to reward ratio. So based upon risk to reward ratio, in case if you want to risk it, guys, you could have taken a short position, risking just one candle stop loss. So I think that would have been a very good trade, guys, in case if you could have taken. But what you need to see is that the three candles over here, which broke even this low, guys, over here, has left a fair value gap over here. You can see the market after this kind of liquidity sweep at this demand zone over here showed a very good huge bullish momentum and came all the way to this mid of the first candle, or you can consider the 5 minute zone, both lying each other, but market failed to cross above this, guys, above the mid of the first candle as well as the 5 minute zone, rejected price from these levels and continued further bearish. And again the market showed another some sort of demand over here, but here failed to cross this 200 moving average and again came, guys, and mitigated this fair value gap. And after mitigating this fair value gap, the market showed a very good bullish momentum over here. So there would have been many possible scenarios, guys, where you could have taken long positions. Still, after seeing this kind of rejection, and you can see the market clearly broke this structure towards the upside, and you can see this kind of consolidation. And after this breakout, you could have taken anywhere along these lines, guys. But what we need to see is that the market's shaping this liquidity over here. But you can see again the market retraced all the way to this fair value gaps over here, rejected price and continued further bearish. But what you need to remember here is that you can see there was a multiple rejection of price from this 5 minute zone or the mid of the first candle and clearly signifying some sort of bearishness, guys. And if you consider the high, the common high of this candle to all the way to this low of this candle, you can see what happened here is that there is a fair value gap over here, guys. So let me mark the fair value gap over here. And above this fair value gap, there is a buy side liquidity over here, guys. So what you can see here. So let me explain to you, guys. Above this fair value, there is a rejection of price, and the market clearly broke the structure low, clearly signifying some sort of bearishness. So you can see a clear break of structure, and the market continued further, mitigated its order block levels. You can see a clear order block level over here. This is a 1 minute order block. Once the order block has been mitigated, it doesn't hold any value, guys. So the next liquidity is here itself, where the market showed some kind of fair value gap. So what happened here is that after rejecting price from these levels, the market clearly showed some kind of bearish momentum, broke this low, again retraced and mitigated this fair value gap, again broke structure towards the downside. You can consider this to be an initial chalk formation over here, or you can consider a market structure shift, or what you can consider is a chalk only, guys. Let's consider this to be a clear chalk formation. And you can see there is a liquidity over here, and with this candle, the market mitigated this fair value gap above this levels over here. and rejected price from these levels and continued bearish, guys. And after this kind of bearish momentum and the market consolidated in a sideways, in case if the market sentiment would have been bullish, guys, where the market clearly showed a breakout structure over here, and what you could have either expected is that the market continuing retracing and continuing further bullish like this. This is usually how the market behaves. And you can see clearly the 200 moving average support over here, as well as the 9, as well as the 21 moving average where price is rejecting, guys. Instead of forming this, guys, the market instead broke structure towards the downside and with this huge bearish candle, guys, where the market broke and closed below this 200 moving average, below the 9 as well as the 21 moving average, and with a lot of patience, guys, where you could have taken short position over here and targeting it all the way towards the downside. And for target levels, what you could have done is to plot the common point between these, to the common point between this, to the common point between this. So if you try to plot the common point between this, so you could have targeted it all the way to this 1.68 level, guys. You can see a clear 1.68 level target is where you could have targeted all the way to this levels over here, right? So I hope you're understanding, guys, what I'm saying. And you can see throughout the day, the market is consolidated in a sideways manner, or you could have targeted this sell side liquidity over here. You can see the rejection of price over here, this sell side liquidity of the 1.68 level with a minimum risk to reward ratio. So there is only one possible trade opportunity, guys, on Tuesday where you could have taken with proper confirmation, but there are many opportunities where you could have just scalped, but not a clear price action, guys. So this is about Tuesday, guys. Since it's an expiry day, you can expect the market to move sideways only, and you can see this kind of wide pivot range, guys, clearly signifying the market sentiment to be bearish or to be sideways only. Whenever you find the market sentiment, market has a wider pivot range, guys, and you can see the market breaking up and down the pivot levels over here. You can see this black color line over here is the central pivot, guys, and you can see the market breaking towards the upside, breaking towards the downside, again breaking towards the downside. You can see how the market here, guys, between the pivot levels breaking down and here. So that's why it's very difficult to trade on this trade, but definitely I've showed you one trade opportunity where you could have taken and made a decent profit based upon your risk to reward ratio. And this is about Tuesday, guys. So coming to Wednesday, let's see how the market behaved on Wednesday. And on Wednesday, guys, you can see the pivot range is narrow when compared to Tuesday, and it is an insider pivot, guys. Whenever what an insider pivot is that the previous candle pivot when it is inside, or the next day the pivot is inside the previous candles, previous day's pivot range, guys. It clearly signifies on that day you can expect a huge momentums. So you can see that it was a clear insider pivot, and you can see the market rejecting from this trading below this pivot range itself. You can see this is the black color line over here is the day's pivot level, and the market is trading below the pivot levels inside. But before that, guys, let's consider the mid of the first candle. And if you consider this kind of huge bullish candle over here, and let me mark the mid of the first candle, the 0.5 levels, as well as a 5-minute zone as well, guys. So let me mark the 5-minute zone as well. So if you ask me to mark the 5-minute zone, so the low to high of this candle over here, this is a clear 5-minute zone. So let me mark this 5-minute zone. So in case if the market is trading below these levels, guys, always consider to be trading in favor of that direction itself. So in case if the market is trading above the 5-minute zone and the mid of the first candle, always look for bullish. You can see on this day the market trading below the 5-minute zone as well as the mid of the first candle, and you should always look for bearish setup. And you can see on this candle, guys, where the market is trading above the 5-minute zone as well as the mid of the first candle, always look for bullish setups, the 1, 2, 3 or 5 bullish setups, guys, and only one reversal where you can see the market has been overextended. So you could have expected some kind of retracement, and you can see you could have just traded whenever the market on a trend day is overextended. You could have expected the market to retrace, and on this retracement itself, we have captured it. This is not a trend move over here. And here you can see the market trading below the middle of the first candle as well as the 5-minute range, where price is rejecting from these levels, and you can see the market rejecting from this fair value gaps over here, swept the buy side liquidity, and again broke this with a huge bearish candle over here, and that's where I have taken a short position and targeting it all the way to the sell side liquidity. And here also, guys, you can see the market on this day, guys. The market here is a 5-minute zone. This is the middle of the first candle, and above this black color line, guys, over here is the pivot levels, and above that level is the Monday's VWAP level, guys. This is the Monday's VWAP level. And let me mark on Wednesday's VWAP level as well. So in case if Monday's VWAP level also will show some kind of confluence over here. And you can see the market here also, guys, is trading above, up and down the 200 moving average over here, guys. So you can see the blue color line over here. The market is breaking towards the upside, again showing some kind of impulsive momentum towards the downside. You can see the market here rejected price from this 200 moving average as well as the 9 as well as 21 moving average and showed some kind of bullish momentum. But here the market rejected price from these pivot levels, guys, clearly signifying bearishness and clearly broke structure towards the downside. You can see this kind of impulsive momentum where the market failed to cross above this VWAP level, the pivot levels, guys. In case if the market sentiment would have been bullish after this kind of rejection, the market would have clearly broke these levels and retraced here and continued further bullish momentum. This is usually what happens in case if the market sentiment would have been bullish. But here you can see the market failed to cross above the pivot levels, the day pivot level, the Monday's VWAP level, as well as the mid of the first candle, and showed some kind of aggressive momentum towards the downside, clearly signifying bearishness. And if you try to plot the order block level here, you can see the market came, indicated this 1 minute order block over here, and it formed an inducement zone over here. So either you could have even captured this momentum where the market, if you consider the high to low of this candle, you can see the market reaching all the way to this fair value gaps over here, mitigating and showed some kind of bearish impulsive momentum. So either you could have taken short position over here and you could have targeted this sell side liquidity over here. This was another scalp over here where you could have taken. But what you can see here is that if you consider this kind of huge momentum, guys, where the market over here swept this liquidity below this levels, you can see the market took this liquidity. This is a clear sell side liquidity where the market swept and showed some kind of momentum and clearly broke structure towards the upside. You can see, you can consider this to be a break of structure. But this impulsive momentum, guys, you can see there is no clear fair value gaps over here, guys. You can see even after showing this kind of huge bullish momentum and the market reaching all the way to this order block level also. The market over here, guys, in case if the market shows some kind of bullish momentum, the market retraced and rejected price from this order block levels and formed a chalk over here, clearly changing the market sentiment from being bullish to bearish. And you can see a clear chalk formation over here after mitigating an important levels, guys. Whenever you find when the market reacting to certain levels, guys, it's very important. You could have marked the sell side liquidity over here, and you can see after this kind of huge bearish momentum, you could have expected the market to break these levels again, retest these levels, and continue further bearish momentum. But what happened is the market came. So that's why it's important when you mark these levels, guys. Whenever you could have taken short position at this point of time after seeing this kind of bearish candle over here, you could have targeted it all the way towards the downside when you have already marked the sell side liquidity. So in case if you might have not marked, what you could have expected is that the market might show another bearish candle towards the downside and let me exit it at that time. But it doesn't work like that, guys. You can see how whenever the market came to an important zone, mitigated these levels and showed some kind of bullish momentum. So that's why it's very important you to mark these levels in before and see in case how the market reacts at that levels, guys. In case if you might have already marked these 1 minute order block levels and you can see the market reaching all the way to these levels and show some kind of aggressive momentum towards the downside. And again, market tried to move higher but failed to make an higher high. And if you consider the common point in this to the common point in this, when the 0.5 levels has been broken towards the downside with this kind of huge bearish candle, and this is where you could have taken short position, keeping your stop loss just above that candle and targeting it all the way to this sell side liquidity or even this sell side liquidity as well. So that's how you could have targeted this. And again, you can see the market showed some kind of proper retracement and failed to make an higher high. Instead, the market broke structure towards the downside, forming a clear chop formation, guys. And what you can see here is that if you consider this momentum over here, this is a clear buy side liquidity where the market over here showed a very good rejection over here. And if you consider this momentum towards the downside, the common point between this to the common point between this, you can see the market retraced or mitigated all the way to this optimum trade entry zone over here. You can see, guys, the optimum trade entry zone where the market came and mitigated these levels, and there is overlying fair value gap over here. So there is a clear fair value gap as well as overlying fair value gap as well as the market mitigating this optimum trade entry zone. So the market came all the way and even rejected price from these levels and clearly broke structure towards the downside. You can see a clear chop formation, buy side liquidity sweep, and again the market clearly broke structure towards the downside. And if you consider this swing momentum, the common point in this to the common point in this, you can see here again the market coming all the way to this optimum trade entry zones over here, where the market coming and mitigating this optimum trade entry zone, rejecting price from these levels and continuing further bearish towards the downside. So what you could have done is that you could have either entered short position over here, guys, keeping your stop loss just above this fair value gap over here and targeting the first target towards this buy side liquidity and sell side liquidity over here. As there is no fair value gap over here, you could have targeted the sell side liquidity, and after this you can see the market showed some kind of bullish momentum but rejecting price from this optimum trade entry zone over here And you can see this bearish candle over here, guys. And you can see this bearish candle, this momentum over here, guys, broke the day VWAP level, the 200 moving average, the 9 as well as the 21 moving average, which is as same as this momentum over here, guys. This single candle over here, guys. You can see if you try to plot the day VWAP level over here, you can see this candle. This is the day's VWAP level. This Monday's VWAP level, the 200 moving average, the day as well as 9 as well as 21 moving average. Everything broken towards the downside, guys, clearly signifying bearishness. And the same thing pattern happened here, guys, with this bearish momentum where the market broke the day VWAP level, the 200, the 9 as well as the 21 moving average, clearly signifying bearishness. And you can see after this, the market showed a channel pattern formation. Whenever you find this kind of pattern, it clearly signifies some sort of bearishness, guys. The channel pattern formation over here clearly signifies bearishness. And what you can see is that the market is showing some kind of bullish momentum, making a higher high and higher lows with no fair value gaps, no imbalance, no proper fair bullish momentums, guys, clearly signifying bearishness as compared to this. Buyers are not strong enough, guys. They're not aggressive enough. So what you can consider is after this kind of huge bearish candle, this is where you could have entered, keeping your stop loss just above these candles. And for target levels, this was the first. This was first fib extinction level. So if you consider the common point between this to the common point between this to the common point between this, so you could have targeted it all the way to 4.26 level. You can see, guys, exactly the 4.26 level where you could have targeted, or in case if you enter your position over here, guys, if you try to plot these fib extinction levels, the common point between this to the common point between this to the common point between this. So either also here also you can see the market coming all the way to 4.26 levels only. So what you could have just traded is you could have just holded on to your trade, and you can see, guys, a very good risk to reward ratio, and you can see you could have traded it all the way to those these low levels over here. This is exactly where you could have traded, guys. See, exactly this level is where you could have targeted. And you can see it's kind of huge bearish momentum towards the downside, and you could have captured whole move towards the downside. And you can see this kind of rejection of price from these levels and showing some kind of bullish momentum. And this was previous candles low. That's why the market, you can see the opening price actually, where the market came all the way to these levels and showed some kind of bullish momentum. So this was another trade opportunity where you could have taken, and what you could have done is to mark this fair value gap over here. So you can see even after mitigating this sell side liquidity, it showed some kind of bullish momentum, but rejected price from these levels again aggressively closed here. So if you consider this bearish momentum towards the downside and mark the zero point 0.5 levels over here, this is the zero point 0.5 levels of this bearish momentum towards the downside. So either what you could have done is that once if the zero point 0.5 levels been broken towards the upside, what you could have either considered is to take a long position over here, keeping the stop loss and targeting it all the way towards the upside edge. And for target levels, you could have drawn the fib extinction levels, the common point in this, to the common point in this, to the common point in this. And you can see how the market came all the way to 1.6 level over here. So this was another trade opportunity where you could have taken. In case if the market sentiment would have been bearish, guys, after this kind of huge bearish momentum over here, after rejecting price from this 200 moving average, the market would have mitigated its levels over here like this, rejected price and continued further turning towards the downside. But this kind of aggressive momentum, where price mitigating this fair value gap, failed to make a lower low. Instead, the market showing some aggressive momentum and even breaking these levels, guys, clearly signifying bullishness. So this wouldn't have happened in case if the market sentiment would have been bullish. So after this, if you could have plotted the zero point 0.5 levels of this retracement along with that, guys, in case if you try to plot your anchor gap levels, and you can see the price, let me consider this though, and you can see price trading above this anchor gap levels, clearly signifying some sort of bullishness. And you could have either kept your stop loss below these levels and continued traded towards the upside, guys. So if you consider this momentum, so you can see or this fair value gap over here is where you could have considered it. So this is how, based upon risk to reward ratio, you could have just traded. And this was one good opportunity where you could have traded towards the upside as well. Since the market has been overextended towards the downside, you could have expected some kind of retracement. Since the market has been overextended towards the upside, you could have expected some kind of pullback. And this is another pullback, guys. And that's how you could have traded over here. So let's take this day VWAP level out, the anchor VWAP level out of. And what happened here on the next day, guys, you can see a narrow pivot range over here, clearly signifying that the market is going to be trend day. And what you need to see here is that, guys, What you need to see here after Wednesday is that the market formed a low over here, but rejected price from these levels and closed within this range. Guys, clearly signifying some sort of bullishness where the market swept this low over here. The sell side liquidity over here, a clear sell side liquidity. Market swept this sell side liquidity. What happened is that here also the market, since the market even broke this level size, this is another sell side liquidity where you could have considered the market to sweep this low. So let's consider looking to a 5-minute time frame over here. So this is another sell side liquidity. So you can see the market here swept this low, guys, but closed within this range. And the next day, what happened is that the market came and swept this low also over here. So if you consider this low also has been swept on this day, and what happened here is that what we need to consider here is that to mark the sell side and buy side liquidity, guys. So let's mark the sell side liquidity. So since there was some aggressive selling towards the downside, and the market retraced. And during the second of the day, the market showed some kind of bullish momentum. But here, what you can see is that again, the market rejecting price and continuing further bearish. And what you can see here is that even after the price rejecting from these levels, guys, and showing a huge bearish momentum, if you consider this momentum is over here, which is not aggressive, guys. There is no aggressive selling over here. You can see a very balanced move over here with no fair value gaps. There is no imbalance, as well as even though there is a fair value gap here, you can see the market immediately mitigated this fair value gap, which is not showing a very aggressive momentum towards the downside, guys. And as usual, what we need to plot is to plot the mid of the first candle. So if you consider the high to low of this candle, what we can do is to plot the 0.5 levels as well as the 5-minute zone as well, guys. So it's 2, 3, 4, 5. So if we consider this candle over here, so let's mark the 5-minute zone as well. This is another 5-minute zone where you could have easily marked over here. And we can see since there is a narrow pivot range, guys, so you could have either expected some kind of trend momentum. And what we need to always see is that I usually trade buy and sell side liquidity as well as fair value gaps, guys, whenever the market is reacting to certain liquidity levels and market is reacting to certain fair value gaps, rejection of price from optimum trade entry zones, and demand as well as supply resistance. Only to these levels only where I can consider the market sentiment to be bullish or bearish, guys. You can see after this kind of huge rejection of price from this candle over here, guys, the market showed and broke this 200 moving average towards the downside here, as well as market is trading below the 9 as well as the 21 moving average. And let me plot the day VWAP level, and you can see here the market is trading below the day VWAP level, clearly signifying bearishness, guys. So you could have easily taken keeping your stop loss just above this 200 moving average and targeting it all the way towards the downside. So you could have targeted it all the way to the sell side liquidity. So this was one great opportunity where you could have taken. This is just for a scalp price. In case if there was aggressive momentum towards the downside like this, guys, with fair value gaps or imbalance, I would have just holded on to my trade, even targeting new lows, guys. But you can see, even though the market was showing some kind of bearish momentum, there is no proper imbalance in candles, guys. Clearly showing the market sentiment is not as bearish and not bearish, guys. And you can see after this kind of huge bearish candle, immediately the market swept this liquidity below and showed some kind of bullish momentum and even broke structure towards the upside, broke the structure towards the upside, or even this candle over here. You can see the market retraced here, broke the structure. Immediately the market reversed, guys. Whenever you find this kind of V-shaped recovery, guys, V-shaped recovery after market sweeping certain liquidity levels is when you should consider the market sentiment is strong, guys. But in case if you find this V-shaped recovery anywhere along these levels, it doesn't signify any momentum, guys. But whenever you find market liquidity sweeping yesterday's low as well as the sell side liquidity over here and showing some kind of bullish momentum, it clearly signifies that the market is showing there are buyers stepping in the market. As you can see, definitely there are buyers who might have entered here. Even after this kind of huge bearish, a lot of impulsive, aggressive buyers might have entered, trying to push the market towards the upside. Again, the market rejected price from these levels and came, but again, the market shows some kind of bullish momentum. You can see market is making a higher high, higher lows. Market failing to make a lower low, showing a very good momentum, guys, towards the upside. And what you can see here is the liquidity levels. So you can see trend line liquidities. This is a channel liquidity, which clearly, whenever the liquidity is towards the upside, it signifies bearishness, guys. But what I need to explain is that you can see this kind of liquidity after this kind of huge bullish candles and another liquidity levels over here after the market shows some kind of bullish momentum. these two candles over here, these two candles over here, whenever you find this kind of bullish momentum, guys, as well as price taking support from 9 as well as the 20 moving average over here, clearly signifying some sort of bullishness, where the market, guys, here failed to make hello value. Instead, the market broke structure towards the upside. You can see clearly the market here broke a structure towards the a clear break of structure towards the upside. And if you consider this impulsive momentum towards the upside, the low to high of this candle, the market reaching all the way to this optimum trade entry zone. This is the optimum trade entry zone where the market came, mitigated these levels over here and rejected price from these levels and continuing further bullish. So you can see after this, whenever the market guys reacts to optimum trade entry zones and found a clear price action where the market is breaking structure. So what you could have either done is that if you consider this bearish momentum guys, if you consider the high of this candle to the low of this candle, so you could have easily marked the zero point 0.5 levels over here and wait in case if the market breaks above these levels guys, above these zero point 0.5 levels over here. Once if this zero point 0.5 levels has been broken towards the upside, you can see the market forming another channel pattern over here, another channel pattern which I've already mentioned to you. So what you could have done is to take long position over here, guys, keeping your stop loss just above below this candle. I hope you're understanding, guys, why I am taking this position. Either you could have taken your position here also, guys. Either you could have taken your position here also. But for better confirmation, if you could have waited, guys, you could have definitely taken your position here as well. So whenever you find rejection, guys, always wait for retracement and see how the market behaves when the market retraces, guys. When don't take your positions aggressively after the market sweeping this liquidity and don't take your position, guys. Always wait for a retracement. And when you find the retracement levels to be perfect, guys, when the market respecting certain retracement levels, either the 50 levels or the fair value gaps or the uh, optimum trade entry zones or anything, guys, it doesn't matter what, however the market is showing some sort of respect. And when you try to plot the retracement levels and even the retracement should not be very aggressive, guys, compared to the impulsive momentums. You can see this retracement level is not as strong when compared to this kind of bullish momentum towards the upside. And what we need to draw is that the fib levels of this retracement and see in case if the market aggressively breaks the zero point 0.5 levels of this retracement levels. And you can see after market reaching an optimum trade entry zone, aggressively showed some kind of bullish momentum. And if I try to plot the retracement levels, the zero point 0.5 levels over here, you can see the market rejecting price from the zero point 0.5 levels and trading above the 9 as well as the 20 moving average, clearly signifying the market sentiment is bullish here, guys. And based upon risk to reward ratio, you could have easily taken long position here, keeping your stop loss just below these candles only, guys, in case of this candle over here and targeting it towards the upside. So if you consider this web extinction levels over here, the low of this candle over here, the high of this candle, and all the way to the low of this candle, so you could have targeted it all the way to 4.26. I hope you're getting this. You can see how the market came rejected all the way to this levels and the 4.26 level over here, the 4.26 level towards the upside, guys. I hope you're understanding, guys, why I wanted you to explain this trade so much. But it doesn't matter, guys. If you might have even missed out on this trade, it doesn't matter. I think this is quite unexpected. Seeing this kind of huge aggressive momentum towards the upside, definitely not a normal person would have expected this kind of momentum. But only even I also can't predict this kind of momentum, right? What I can predict is just my risk to reward. My risk, guys. Better let me confirm my risk. I can only risk so much since my price action is showing me the best entry opportunities and I am able to risk this much amount of money. And what I can target is the 5 minute zone or the middle of the first candle. You can see this fair value gap over here. Anywhere along these levels is where I would have wished I would have targeted it, guys. So, but you can see the market showed a very good momentum and reached all the way to this 4.267. So that doesn't matter, guys. And you can see after this kind of huge bearish momentum, guys, what happened is that in case if the market sentiment would have been bearish, the market showed very aggressive momentum, retraced somewhere to 50 levels or these fair value gaps and failed to make in higher high. Instead, the market broke structure towards the downside, guys. You can see a lot of buyers might have entered here, guys. You can see after this kind of rejection, a lot of buyers might have entered. So if you consider the common point in this, to the common point in this, the market rejecting from 0.38 levels over here and showing some kind of bullish momentum. So what you can expect is that here guys, a lot of buyers might have entered, keeping their stop loss just below and targeting again towards the upside, expecting that the market might go further bullish. After seeing this kind of huge bullish momentum, what they would have expected, the market would continue further like this, guys. But instead, to trap all those buyers who might have entered here, guys, the market rejecting price from these levels and broke structure towards the downside. And with this kind of momentum, guys, a lot of sellers might have entered the market, seeing that a lot of buyers might have got trapped, and a lot of sellers also could have entered this position, seeing a clear market structure shift. You can see with this kind of momentum over here. So let me try to plot this, guys. You can see with this kind of momentum is aggressive chalk formation over here. You can see a lot of after this kind of momentum is either a lot of sellers might have entered the market, but what we need to see here is that even after this kind of huge selling pressure, the market failed to break below this low, guys. You can see this was the demand level here, and the market was consolidating in a sideways manner. So what you could look for is a higher time frame structure over here. So if you look into a higher time frame structure and see how the market is behaving, guys, what you can see here is that this kind of huge upside momentum followed by this kind of huge downward momentum is what you can see here is that if you consider the low to high of this candle where the market broke structure is, what I wanted to mention to you is this optimum trade entry zone. As you can see, the market showing some kind of demand over here. This optimum trade entry zone where the market rejecting price from these levels, since there is a fair value gap over here. You can see this fair value gap over here, and you can see how the market respecting this optimum trade entry zone. So this is what I wanted to show you guys, why the market came all the way to this levels over here, since there is a fair value gap over here. Definitely you can see, guys, there is a fair value gap over here. It's imbalance over here, guys. I hope you're understanding. Definitely there is imbalance over here. So if you consider this imbalance over here, you can see the market coming all the way to these levels, mitigating these levels and further showing some kind of bullish momentum over here. You can see a clear breakout structure. So this clear breakout structure. But here what happened is that again, guys, after seeing this kind of bullish momentum, again the market retraced to 50 levels, made an higher high, rejected price on these levels and broke structure towards the downside, guys. Clearly forming another chalk formation over here. But what we need to see here is that in case if the market sentiment would have been aggressive, guys, the market would have not rejected price from this fair value gaps over here. You can see there is a clear fair value gap over here. Along with this fair value gap, guys, what you can consider is that the market mitigating this order block levels. So this is the last down candle before it broke structure. This dodgy candle over here before it broke structure towards the upside. So you can see the market made an higher high, broke structure, again rejected price from this mid of the first candle or 5 minute zone. And here, guys, what happened is that the market here failed to make a lower low here. In case if this rejecting price from this levels, guys, you can see a chalk formation, rejecting price from this order block level. In case if the market would have broken this low over here and retraced, guys, I would have considered it to be bearish. But what happened here is that you can see here the market failed to make a lower low. Instead, the market showed some kind of aggressive momentum here, guys. So you can see this candle over here, guys. This candle over here showed a very good sign of bullish momentum, where the market rejecting price from this day VWAP level, broke the 200 moving average, the day VWAP level, then broke the 9 as well as 21 moving average, and clearly showing signs of bullishness, guys. And what you could have considered is that in case if you consider the market sentiment to be bearish, guys, so if you could have plotted the high to low of this candle, and once if this 0.5 levels has been broken towards the upside is where you could have considered to take long position over here. You can see there is 0.5 levels over here. Or in case if you look into a high time frame, guys, whenever you find that the market is very complicated over here, you can see a beautiful rejection of price from this 200 moving average, clearly signifying some sort of bearishness. So a lot of sellers might have entered here, guys, seeing this kind of good rejection. But what we need to see here is that before this kind of rejection, guys, the market is trading below this range over here. You can see this kind of bullish momentum range over here. Whatever price action forms between this kind of bullish momentum range is not considered, since because out of this range only, whenever you see this kind of rejection, you can consider the market will go further, guys. But what happened is that the market is forming this kind of rejection within this range, guys, over here. So this range is this bullish momentum range over here. So what we need to see is to plot the 0.5 levels. So once if that 0.5 levels has been broken towards the upside, or even this swing high was being broken over here, guys, you can see here the market broke these levels over here. Either you could have expected this buy side liquidity over here, so the market came and mitigated this fair value gap over here or above these levels. So you can see rejection of price and showed some kind of bearish momentum. So either after this kind of bearish momentum, what you could have done is to plot the retracement levels over here, the fib level, And you can see once if the 0.5 levels again has been broken towards the upside is where you could have considered to take another long position, keeping your stop loss just below this candle itself, guys. So long position over here, keeping your stop loss just below this 200 moving average, one trade opportunity, and another long position over here, long position over here, keeping your stop loss just below this candle is another trade opportunity and targeting it towards the upside. And for target levels, you can definitely use this fib extinction levels over here, the common point between this to the common point between this to all the way to this common point, guys. So what you could have targeted is the 1.68 level. I hope you're understanding this. So this is exactly where you could have targeted the 1.68 level. And you can see how beautifully the market went all the way to this level, targeting it all the way towards the upside. So you can see, or you could have exited with this candle over here, breaking the 9 as well as the 21 moving average towards the downside. Or what you could have done is to plot this fair value gap over here. So in case if the market rejecting price from this fair value gaps is where you could have entered another long position also. But you can see the market consolidated towards the sideways after this kind of momentum is. But definitely, I hope you understand is why you could have taken position over here. This is a failure swing, guys. Even though the market formed a chalk over here, the market failed to sweep liquidity above these levels and formed a low resistance liquidity sweep. And this is a failure swing. Whenever you find failure swings, guys, with even though the market broke structure towards the downside, it is not considered to be a strong moment, a strong bearish candle over here, strong aggressive, or you can continue to be a strong supply zone over here. And here it's not a strong supply zone. Here it's not a structural zone. There's a failure swings, failure swings, failure swings, failure swings. But definitely not this, guys. If you're looking to add time frame, the market rejecting from the sell side liquidity over here and broke structure towards the upside, which I have mentioned you in a 1 minute, 1 hour time frame, which I have. This is a high resistance liquidity sweep, guys. Sweeping the high resistance liquidity rule and breaking structure towards the upside, which clearly signifies the market sentiment to be bullish. So you could have always looked for upside, guys. And what I have told is that whenever you see market trading below the line as well as the 21 moving average, always look for bearish momentum. But you can see, even though if you could have considered to take bearish momentum here, but the price action here showing some kind of bullish momentum, you could have targeted this 5 minute zone or the mid of the first candle. But with this kind of impulsive momentum, which broke the 5 minute zone as mid of the first candle and even closed above this level, guys, clearly showing bullish momentum, you could have considered that this zone is just a equilibrium or the pivot zone. So what you could have looked for is another zone, another retracement to these levels, premium. You can consider this to be a discount levels, retracing price to this discount level. So if you consider this the premium zone is above the 0.5 level and below the 0.5 levels is a discount zone. So a price retracing back to discount levels, grabbing all the liquidity and further pushing towards the upside. So that's how you could have easily targeted towards the upside, guys. So that was one great opportunity for you to take long position. And after this kind of narrow pivot range, guys, and a very good trending, the next day would be a wide pivot range. Whenever you find days with a wide pivot range, guys, after a narrow pivot range, I definitely recommend you not to take any positions because you can see throughout the day, guys, there is no momentum happening at all. What would I explain to you guys with this kind of momentum? Even if I show you a good opportunity also, so there is no proper price action, guys. There is no point in you sitting in front of market and trading this kind of trades, guys. After seeing and when you find these white pivot range, guys, definitely don't take the trades on that day, guys. And I strongly recommend you to learn pivot levels, guys. And the book I would like to recommend you to learn pivot levels is the Pivot Boss, guys, written by Frank Ochoa. I think that book is a classic book, guys, if you want to learn about pivot. So in case if you want me to explain on Friday trade analysis also, guys, so let me explain. As the market sentiment is bullish because the market is trading above the pivot levels. So definitely the market is bullish, guys. And you can see the market rejecting price on this 200 moving average, clearly showing some kind of bullish momentum. You can see even though the market showed some kind of selling pressure, immediately the market came back to range with this kind of momentum where the market clearly broke the structure towards the upside, forming a clear market structure shift side. And if you consider this momentum towards the upside, and if you try to plot the common point within this to the common point within, so you can expect the market to reaching below this premium zones, discount zones. And for this discount zones, what you can see here in this discount, what you can see here is that the market sweeping this liquidity over here. This is a clear sell side liquidity sweep. Below this sell side liquidity, there is a fair value gap over here. So you can see the market sweeping this liquidity levels over here. So sell side liquidity sweep, the market sweeping this liquidity and showing again signs of bullishness. So either you could have taken your position over here, guys, long position over here, seeing this 200 moving average support over here, keeping a stop loss and targeting this high over here. I think that's the only possible trade where you could have taken, guys. I don't think there is any possible trade where you could have taken. So this is about my trade analysis, guys. I hope you're understanding. In case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family as well, guys, and keep supporting my channel, guys. And in case if you want to keep touching with me, guys, I handed my Instagram over there. So please be generous to message me, guys. In case if you want any help, I would definitely help you in my trading journey and you to become a better trader as well, guys. Thank you.